Alrighty, what is good? It is May 21st. Right now it is about 6:39 p.m. and I'm just going to go over the setups that I posted on Twitter. Today there was 2 key ones, and then there's going to be a couple scalps I want to go over, and I kind of just want to explain the thought process because the people, or some of the people in my Discord, were a little hesitant, I want to say, on how I anticipated what the move was going to be today, or how to anticipate it in general, right? So immediately getting into the morning, right? And I want to make this really, really clear. I never frame a bias before 8:30 open, 8:30 open CST. That's New York open for my time zone. So you can just frame it off of New York time zone, right? I usually never frame a bias before then. Why? Because usually open will give us some sort of manipulation driven event. And that manipulation driven event will give me that hand tip of what price is likely to do, right? And once I see that, I can be confident in knowing and anticipating the correct way, or the correct way to engage with price, right? So immediately getting into the morning, right, I did see that we had all of this sideways accumulation right here, right? And usually after accumulation, what ensues? Manipulation, and then we get a distribution driven event, right? So initially I saw all of this accumulation right here, right? And let me bump up to the 72-minute because this is going to be a little bit more clear. And let me delete some of these drawings over here so they aren't getting in the way. Those are previous executions from previous days. However, getting back into this, right? Like I said, we had all of this accumulation right here. And like I said, what usually occurs after manipulation or accumulation is a manipulation-driven event, right? So if we look at the 72-minute time frame, which is usually where I always frame my bias, at least draw on DOL, some people call it, but my bias, right? Where am I anticipating price to go and why? There always has to be a narrative. And once that narrative is found, I will place myself within any given trade that is proper and will give me a good enough trade to make a decent amount of money, profit, whatever, right? So 72-minute, what can we see here automatically, right? We kind of have 2 layered fractals, right? We know fractals are lower time frame swing points, right? We have this one right here. Let me put a gray box on it right here. You can see, let me delete. I need to leave those drawings so I don't have to redraw them, but you can see this fractal right here, right? We also have this right here. So we kind of have stacked fractals, right? So both of these regardless are going to be deemed as a possible POI because on the 72-minute, I did not mean to do that. The 72-minute, those are going to carry a lot and a lot of weight, right? So once we have that identified and we have found our manipulation, how do we know it's manipulation, right? Price closed back within this range, right? We had all of this accumulation right here. What do we have? An obvious swing low over here. What did price do? Price failed to close below that, which in turn, what happens, right? What highs become weak, right? Ultimately, these highs are right up here. This high put in this low, ultimately. Obviously, we put in this low, but that's all intermediate. The external to external is right here. High, low, this high, put in this low, right? And what did we fail to do? We failed to close below. Now, if we would have closed below here, I would have been a little hesitant and anticipated a little bit more of a move down, right? But ultimately, we can't really flip bearish as we need to zoom out, right? There a lot has to happen to flip bearish in this price action, right? So once we have that confirmed close there, I'm automatically thinking bullish, 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 right? Now, bumping down to the 12-minute, what do we see even more, right? And I've talked about this multiple times. When price has a very strong expansion phase and has a lack of consolidation, what usually happens? A V-shaped recovery. A V-shaped recovery with speed immediately returning back into the range, right? If we look at the 12-minute right here, what happens? Immediate return, V-shaped recovery. Like I've talked about a gazillion times during reviews and all of the videos posted on my Discord, right? Now, getting down to the 12-minute, there's not really anything on the 12-minute that jumped out to me in particular, but I did note this right here. Let me zoom in, and I don't want to delete actually I can delete these for now because I know they're causing some issues right there. Okay, what do we see right here? Now, if you're familiar with candlestick structure, you should know this too. What do we fail to do on a candlestick structure? Now here, all of these, what happens? Body closure, body closure, body closure. Now, Once that 72-minute point that we are in, and we are in that area of interest, what happens? We fail to close below this 12-minute candle. And if you're familiar with candlestick structure, you should know that this is going to be like a lower time frame liquidity point, right? Now, with that in mind, I'm automatically waiting. Okay, all right, we could get a bullish flip. We could get something bullish could form here, right? Now, what do we see if I zoom in over at the... Actually, let me back up a little bit because I want to further this and explain why this was such a easy draw for me today. Now, I always talk about this too, is relative equal highs, relative equal lows. They will always be a draw for price, and price will always refer to them after some sort of manipulation-driven event. And if you can see right up here on the 1 minute, what do we have? All of these stacked highs. I know some people, Juno and Tyler on Twitter, some of my good buddies on Twitter, they talk a lot about smooth edges, and that's exactly what these are. These are all just stacked highs right up here. It can't be more obvious than this, and if you can't spot that, then you just need a little bit more screen time, and you'll be able to see those without even thinking about them, right? So getting back into this, like I said, right? So we've established everything, right? We have identified a easy target, especially on the higher time frame, right? Knowing ultimately this is going to be the draw up here. Why? Because we failed to close there on the higher time frame, and now we're just going to be playing internal models trading up to the upside, right? Ultimately, this will be this high and this high are going to be the quote-unquote low-hanging fruit targets. And I'll kind of explain why too, because I closed right here rather than holding all the way up here, which I'll explain here in a minute, but I want to go ahead and get into the entry because it was a little bit different of an entry technique than I usually do because it was a little bit more intuition than anything, right? So in regards to entry, obviously you can see we have this close below here. We close above here. Bullish flip, right? We'll automatically see this. Okay, this could be a change in order flow, and we could automatically or anticipate price to start trending back upwards, right? So I see that. Now, what I usually do is I'll wait for price to refer back to some sort of POI within that area, that given area, right? And then wait for a confirmation for entry. However, this time I did not. And the reason I did not is because everything was so in alignment, I didn't need to wait because I immediately knew we were going to get, at least with high probable and very high conviction, that we were going to get a reaction from here. And I knew ultimately this was going to give me the best R possible in terms of where I wanted to close and my targets that I wanted to fully close at, right? So right then and right there, I took my entry right off this CSS candle down here, right? CSS, the last down close before this up move, that's going to be our CSS candle that we can frame a trade-off, right? So I've also talked about this several times, especially in the views that I do within the Discord from time to time, right? Usually, if it is a big tail wick CSS, I always engage with the body. Why? Look how wide this would be, and look how much drawdown you would wither from this. 14 points of drawdown. Now, since we can identify that there is a big wick right here, and we want to engage when price meets the body because ultimately that is where the most volume is, and we know that price is attracted to volume, we can tidy this down, right? And now, instead of 14 points of drawdown, we only endure 5.25 points of drawdown. We almost cut that in a third. Like that is substantial in trading because ultimately our goal is to mitigate risk, right? We want to be able to engage in opportunities with the lowest risk possible to these markets, right? So directly right there, that is why I engage specifically with the body there because that a long tail wick. Now, if this wick, so say this was a CSS candle right here, this green bar right here, say this was a CSS candle right here, I would there be taking my entry off the top of that wick because the potential risk right there, right? That is a extra like 1.5 points now. And to me, that is not worth possibly missing the trade because of I wanted to get a 1.25 point better entry, right? However, like I said, with this one, this is an 11 point difference in regards to where you could have entered and where you should have entered, right? And that is substantial. That is completely different than prior. So that's directly why I have focused specifically on that body there, right? Now, like I said, I took entry off of this. I had a limit placed right down here. Once price came down here, tag me in, stop below the low, right? However, there was a possible entry technique if you wanted to be a little bit more cautious with this, right? If you wanted to wait for extra confirmation, you could have simply just waited for a swing low to be put in within this area and taken a buy stop on the break above the candle that puts in this low right here, right? That would have been the safer entry, and you would have had a 11.75 point stop, but that's with extra confirmation, so you got a little bit more confidence in that trade, right? Rather than a 8-point stop where I took my entry, right? So automatically, once all of this started to form, I was immediately anticipating, and I had it annotated on my chart, that I wanted to see a close above this imbalance, because that would further confirm that we are definitely indeed changing our state and order flow and will begin to ensue a nice move up towards these relative equal highs right up here and this little swing high right here. Now, why did I close here, right? Because in my video, my initial close was up here, which was obviously hit, right? However, if you note, we had not much economic news today. I think we had one FOMC member. I think it was Waller speaking or something like that. I can't remember the exact name, but I believe that is it. So we did not really have much economic news. So automatically we can anticipate moves to be relatively lethargic and not as speedy. Okay. With that in mind, right, I kind of recognized that this target up here may have been a little bit of a stretch today. So that is immediately why I started to trail it and bring it down to here, as well as the lack of willingness to move. You can see we had all of this consolidation right here, and obviously entry is down here. Price never referred back to it. But when I saw all of this lack of willingness to move, I was like, okay, I should probably bring my target down a little bit and not be too greedy on this day and just take the low-hanging fruit target, because ultimately at the end of the day, profit's profit, a trade's a trade. And if you win that trade, obviously there's always going to be that scenario where you're like, oh, I missed profit. But at the end of the day, you can't care about that. You need to understand that what you take from the market is what you take from the market. What you miss is what you miss. Who cares? Like, there's no sense and like no need to be like, dang, I missed out on this. I could have done this. Now, of course, I could be like disappointed in this because obviously this is my original target up here. But am I? No, because this was still an absolutely beautiful trade. 5.5 R. I'll take that any day of the week. Anybody would take that any day of the week. Now, obviously, this would be basically a 10 R up here. But at the end of the day, I was very satisfied with this trade because everything was in alignment. I positioned myself in arguably the best place possible. I will say this. I don't think anybody, probably other than if Dave took this or some other DTFX traders, got an entry where I got an entry. I saw all of the other traders getting entries up here with wider stops. Now, you should note that and take that and go back test kind of what I'm giving you in these videos, because the entries are so precise. And they'll be able to allow you to play with much lower risk in these markets and give you a better R multiple. So getting back to this, like I said, ultimately up here, this was my, at least for the morning session, my quote unquote DOL, right? Where I was anticipating price to gravitate to, because it was just so obvious, as well as it was within some standard deviation targets, right? Now, so obviously, like I said, I closed right here. Now, once I saw this specific thing happen right here, we come up. What do we fail to do? We fail to take this high. But what do? We engineer even more relative equal highs. And if we look at the 12-minute right here, what do we see? A beautiful 12-minute imbalance. Now, we know when we position ourselves within what the higher time frame, our higher time frame, is dictating, and we get a setup off that is going to be very high probable. And I'll say this before I continue. If you want to increase your win rate substantially, one big thing I would recommend for you to do is, instead of validating your entries on your lower time frame execution chart, ask yourself, would I take this trade if I was taking the trade on the higher time frame chart? Make sure it is logical on the higher time frame chart, and it is in a POI that you personally would take the trade off of. That could either be an imbalance, that could be a CSS, that could be a fractal, but it is very important if you are wanting to increase your hit rate in these markets, that you should be engaging with setups on your lower time frame that makes sense that you would take on your higher time frame. If that, I really hope that makes sense. But I'm telling you, if you take that and you start executing with that in mind, your trading will completely change for the better. And I'm telling you that right now. But getting back into this, right? Like I said, we have this beautiful 12-minute imbalance right here, right? What do we see price do? Obviously, this is the candle that forms this imbalance. We have this beautiful, beautiful little low right here that price usually always does. What do we see price do? We get in a little accumulation phase. We manipulate down. We take this low within inside that imbalance, the low that formed that imbalance, return back into the range. And what are we doing from there? This is that second one that I had posted. We would be taking a buy stop on the break of this candle, or you could just be waiting for a break above this candle and a return back, but that never happens until later on, which does not give you the correct move. That is why I'm a big fan of these buy and sell stops now. But like I said, you'd be taking a buy stop right up here. And where could you target? Easy, easy, easy targets. Again, on this, without even looking left, what do we see? Relative equal highs. We have a bunch of stacked highs. Those are always going to be easy targets for price to refer to, right? So we get entered here. Now, if we are zooming out a little bit and recognize what we failed to do over here and what we engineered, we can automatically anticipate this to be the proper target right up here, right at 760. And I remember telling people in my Discord, after I got out of this trade, I was like, yeah, I originally wanted 760, but I did not like the lethargic price action right here. So I just went ahead and closed that. But when I saw this, I immediately knew with high conviction that this is going to be the setup that takes us up to here, because this specific function that price did. And I also want you to note something too that I've talked about several times with my standard deviations. What did we do here? We closed above the -2 and the -2.5 area, referred back, liquidated some areas, referred back to that imbalance ultimately, and continued up. Because we know with high conviction, once we close up above this -2, -2.5 area, price is very, very high likely to continue higher with the already past price action that it has given us, right? So that was that setup specifically. Those were the two key ones that I wanted to cover today, because ultimately those overall were the cleanest trades that presented the best opportunities. But like I said, if you are wanting to obviously learn some more, we are very active in the free Discord, which I'll have linked below. We talk about stuff like this all the time. We do some reviews every so often, which we'll be picking up more, and just answering any questions you have, obviously. And if you have any questions regarding this specific video, feel free to reach out to me on Twitter. Feel free to reach out to me on Discord. Well, actually, take that back. Discord. I don't answer DMs too many and just too much of a headache. But Twitter, hop in the free Discord. Just at me personally on there. I'll see that way faster than the DM on there. But if you have any questions, like I said, feel free to ask. And I will catch y'all in the next video. I appreciate y'all. Peace.